All right, we can get started. So hello, everyone. Thanks so much for joining us for this webinar on the US Special Bar Quality or SBQ market. I hope everybody can see the slide that's up right now and hear me clearly. And if you can't, please drop a message in our chat box and we'll try to help you out. I'm Grace Asenov, North American Steel Editor at Fastmarkets, and I'm normally out of our New York office, but I'm joining you from London today. And I'd also like to introduce our senior price reporter, Robert England. He's the principal reporter that's covering SBQ in the US. Robert is going to talk for about 20 minutes, starting with an explanation of how we assess the SBQ market and how the market is structured in general. And he's also going to discuss what we've seen in the last couple of years following the beginning of COVID and also the beginning of the war in Ukraine, which has caused a lot of volatility in the raw materials prices behind SBQ. When he's finished with that, I'm going to talk for about 5 minutes at the end about how our price reporters at Fastmarkets assess commodities in general. And then we'll have time for Q&A. So as we move through the slides, if you have any comments or questions, please insert them as they come up, and we'll have time to get to them at the end. And I hope you'll walk away from this webinar with some knowledge about how the SBQ market is structured and the key factors driving it. And I also hope that if you're active in the spot market, that I can convince you to speak with us if you don't already. And if you're interested in learning more, maybe if you're not active in the spot market, but you want to know more about our price and maybe how you could use it in negotiations or a contract, we'd be happy to set up a confidential one-on-one meeting with you. And with that, I will pass it off to Robert. So thank you so much.
Hello, everyone, and thank you, Grace. We're here today to delve into all the moving parts of the pricing of SBQ, and more specifically, how we price it at Fastmarkets. And to state the obvious, the pricing of special bar quality steel is complicated. And the key reason it is complicated is due to the fact that the steel making process for SBQ itself is complicated and precise. So some of the key qualities of special bar and what makes it special is that it exhibits high resistance and tolerance for metal fatigue. It's made in a range of carbon grades and alloy grades. It can be shaped into round, flat, square, and hexagonal bars, although we price only the 1-inch round bars. And it's used for more demanding processing and end-use applications than more merchant bar quality steel. And merchant bar quality, by contrast, is only carbon grades, while the SBQ has both carbon and alloy, and many more alloys that might be used in other steel products. So the chief buyers of SBQ would be the people in the hot and cold forging and machining and cold drawing industries. And they use the SBQ material to make a host of products. And I've listed some of them here: bearings, gears, electric motor shafts, valves, crankshafts, automotive hand tools, and drill string components. As you can see, automotive is a big end market for SBQ, but it's also sold into oil and gas, construction, agricultural, industrial, and aerospace markets to suppliers for original equipment manufacturers. Here are the 5 round bar grades that we assess. And as you can see, there are 2 hot rolled SBQ grades that we assess. One is a carbon grade, the 1000 series. That has manganese and silicon in it. And the other is the 4100 series, which is the alloy grade. And that has additional alloys, including chromium and molybdenum, as well as manganese and silicon. And then there are the three cold finish grades. So within the cold finished category, we've got two carbon grades. The 1018 is similar to the 1000 in many ways, in that it has manganese and silicon. The 12L14 grade is a carbon only. It doesn't have manganese only, I'm sorry. It doesn't have the additional silicon. And the cold finish 1-inch round 4140 alloy has the same list of alloys that you have in the 4100 series. These are the specifications for that we use for assessing SBQ grades. The quantity, and they are there's minimum of 10 tons. There is their FOB US meal, and of course that's priced in dollars per hundredweight. We do it every monthly on the third Friday of the month, and it of course includes raw materials, surcharges, alloys, and other surcharges, as you will see. You can see the information on our methodology at the link if you just Google Fastmarkets steel methodology. Now, just on a historic note, the data at Fastmarket goes back to 1993. That's the electronic data, and we had recorded data that in paper markets that goes back before that. It has been a monthly index since 2011, November 2011, and each month we call on sources from a pool of 50 different sources that includes mills, distributors, traders, and end users, of course. So at this point, we're going to pause, and we have a poll question for the attendees that we would like for you to respond to, and so we can see what you're seeing in terms of demand in the market for the next 6 months. And you have 4 choices. You should pick only one. One is you expect demand to keep modest to mostly keep rising. You expect it to be steady, mostly decline, or be uncertain. So, as you can they see now?
They can. I see the
Okay.
answers coming in, but I'll give it another
Okay.
20
All right.
seconds
Yes,
or
as
so.
I expected, it would. The dominant response is remain steady. So we'll see how that continues as more responses come in. So next, I'm going to dig deeper into the various methodologies that together help us assess SBQ pricing every month. So it's priced, every mill has a slightly different methodology, and they have ways of smoothing the costs, the variable costs of all the factors that go into the methodology, including scrap and alloys. And there can be shifts in base prices, and recently there were also energy surcharges. So to look in first, I think we should look at the scrap methodologies of the two major mills. One is Nucor. Nucor relies on a 2-month rolling average of #1 busheling, Midwest mill, and Steel Dynamics relies on the current month's average of #1 bundles in Chicago, Cleveland, and Pittsburgh.
I can share the results right now if everybody wants to see. I just didn't want to.
Sure.
So is that what you expected? We got almost 60% Thing
Yes,
remains steady.
that is what I was expecting because, I've been talking with sources. And that has been the most common response when I ask them where demand is at the moment that I've been getting from sources for several months now. And
I know we're going to look at scrap prices, so interested to see how that might change in the next 6 months. But I'm going
right,
to stop sharing and let you keep going.
okay. So here is how Nucor does it, a little more detail on Nucor's scrap surcharge. They take the 2 months rolling average, which is it's $430 per ton for January and February. They calculate that average and they send that notice out to users. Then they subtract a program-based charge of $170 per ton. And so based on that, they calculate the March surcharge here at $260 per ton or $13 per hundredweight. And this price goes to effect for shipments starting March the 1st. Here is some more details on SDI's methodology. As I mentioned, it's the current month average of number one bundles. SDI hasn't posted its numbers online yet for February, so these are the January numbers. And the average for Chicago, Cleveland, and Pittsburgh was $413.67 per ton. And they also have a baseline, they subtract $115 per ton. And so their charge effective for February 1st was $298.67 per ton or $14.93 per hundredweight. The mills also additionally have their own way of calculating alloy surcharges. And this month is particularly interesting in that regard because molybdenum increased over 30% this month, which is a most unusual move. But typically, Nucor will take the average of 2 months and then subtract the baseline number. Then they'll multiply those numbers by a yield, 70, 85%, and they will then get their surcharges for the alloys. SDI does a similar thing, but with this current month, they don't smooth by months, by more than 1 month. And then they have a similar yield, and then they multiply it by a number representing the mid-range of the grade. So, and as I mentioned, base prices can also change, and recently base prices have actually been declining as supply and demand has come more into balance. And energy surcharges also were introduced last year, and some of those are designed so that they will go away when energy prices return to more normal levels. And it was only a couple of mills. This was not widespread, but they were a factor in the pricing. And I also meant to add that Nucor introduced a surcharge for silicon effective January 1st. So they added that. And I don't think other mills have done that yet.
I also just wanted to jump in. We got a couple of comments that I just wanted to shout out. So I think 2 slides ago, it was in metric ton and it should have been in short ton that somebody pointed out. And I think that has to be right because we're also talking about hundredweight.
Well, this is how that it is published by Nucor. So this is Nucor. Nucor uses those tonnages and they calculate, that's their calculation of the hundredweight. So we take their inputs and then we do our assessment and combining all these inputs and come up with a number representing them all. And our number is in short tons.
So 2 slides ago, the surcharges you were talking about are those are in short tons, right?
No, those were in gross tons. The ones for Nucor and SDI. So that is how they publish them. So that's they publish them with that particular measurement. So
Someone also said that Nucor has a 3-city average, $115 per short ton baseline.
yes, they have a 3-city average. That's SDI. They have a 3-city average in the current month, and they also subtract the baseline. That's for the scrap surcharge.
I guess
And
that one's gross ton too.
yes. So yeah, and also I might add that this is just a broad view of what they do. This is what they notify their users of what the charge is, but the actual calculations might get much more involved. And this is just the broad view for various grades. It's everything is complicated.
We also got a couple of questions about if the slides are going to be available afterwards, and they will be, and also a recording of this webinar will be sent out as well.
So this slide on the screen now shows you the movement in the last few years for SBQ and the various grades. And what it shows is that the grades move together, which is typical of almost any period, although they are slightly different because some have alloys and some don't. And these are our numbers as opposed to the numbers, raw numbers that we're talking about from our sources. And what this particular graph shows, there was a leap in prices in March and April of 2022 amid a surge in demand and a buyer panic after the Russian invasion of Ukraine raised supply chain concerns. So at that point, that's when the mills went into controlled order entry with extended lead times for hot roll SBQ. And while there was some extended lead times in cold finish, SBQ had by far the longer lead times. So now if we look more closely at the most recent year, well, since July, I wanted to focus on that actually. Since July, and prices have moved lower in line with falling raw material costs. And during that time, there was an improving balance between supply and demand as the mills caught up with all of the demand that was, I wanted to go back here. All of the orders that had come into them. And they found out at one point that a lot of people had placed duplicate orders, and slowly everything was sorted out, and the demand and the supply came more into balance. So here you see some of the factors that have been shaping the trends that I've been talking about. Controlled order entry, the volatile scrap and alloy charges, hot roll supply increasing, lead time shrinking since the summer of 2022. Base prices were rising early last year and stabilizing by year end and now falling. And cold finish supply was tight in the spring, but had improved with shorter lead times by the end of the year. And during all this time, demand was fairly steady from automotive rising and also recovering from energy. There were two key markets that drove demand during this time. This is a chart that shows the volatility of busheling prices, the key component in SBQ. And the purple is the price increase, and black and gray is a price decrease. So as you can see, in any given month, the intensity of the increase would show you the degree of the price change. So if you look at the square for March of 2022, that was the highest, that was the biggest jump in the last 10 years. And then the biggest drop came in July of 2022. And this particular month in February was the first increase during the month of February since 2010. So this slide gives you a view on the spread between SBQ and busheling, a key component as we've been discussing, and how it has changed over time. So between 2012 and 2019, the spread was variable within a more narrow range than it has been recently. And then, of course, in the last year, the spread showed the high volatility we've been talking about. And the lowest spread was reached in December 2020 at $322 per ton. And by July of 2022, it was the highest in 10 years at $1,073 per ton. This shows the more recent end of that experience. And you can see a reversal of some of the volatility with sliding surcharges, base price stabilization, shorter lead times, and the margins and the spread is returning to more historic norms. And finally, I wanted to show you this slide that gives you an idea of the percentage change between busheling and SBQ. So this is a more dramatic view of how one price for 1 month shifts in terms of percentage from the prior month. And you can see the two prices that are overlaying one over the other. So you can see the comparable volatility of each of those two factors. So the blue is the busheling index, and then the pink is the SBQ. So if you look at the early part of the left side of that, the busheling prices moved higher faster. Then they were volatile in this middle piece. And then the busheling moved down faster than the SBQ. While during that whole time, the SBQ was more moderated and as a price, so that it was less volatile and more comprehensive in the end. So that's, of course, because SBQ has a broader array of cost factors into it. So if you look at this as the race between the tortoise and the hare, as in the old Aesop's fable, you would have to make busheling would be the hare and SBQ would be the tortoise. And in terms of success in measuring the shift, the race would have to go to the tortoise. So at this point, I have a second poll question that we would like to submit to the audience. And that is regarding a base price assessment. So people have inquired over the past year about whether or not we should have a base price, a separate price for the base price SBQ. And we thought we would ask people if they thought we should adopt a price, and we will, look at these results and conduct a review internally to see about the feasibility of that. But please share with us, and I see you are, about base prices, and I see a lot of interest for both having the 1000 series and the 1018 series, which is very interesting. So at this point, I would like to hand the program back to Grace, and she will let you know more about the methodology that we use in assessing prices.
Thank you. I'm just I think everybody's done answering the poll, so I'm gonna end it, and I will share the results just if anybody's curious to see it. I guess to clarify, Robert, when you say that we would publish just the base price, it would still include the surcharges as well, right? So we would show a base price and an all-in price. I'm not sure if some of the people who said no think that the all-in price would go away, but I think we would just show the components.
Oh, no, okay. No, it would continue, if we did this, we continue to publish all the all-in prices in addition to those transaction prices, which includes everything, it would be a separate price for the base price. So this would be an additional price.
So yeah, if you answered that poll either way, would love to speak to you about, what you're looking at and if you have any interest in talking. So I'll stop sharing that now. And to reintroduce myself, if you missed the beginning, I'm Grace Asenov, North American Steel Editor for Fastmarkets. And I'm going to talk for just a few minutes about how Fastmarkets assesses prices in general, how we set and publish SBQ, any methodology questions, and then we'll move into Q&A. And I see that we do have some questions already, so we'll definitely have time for that at the end. Robert, if you could keep moving the slides forward. So Fastmarkets complies with the International Organization of Securities Commissions, which is known as IOSCO. They put out regulations for price reporting agencies like Fastmarkets. And it's still the next slide. Just to give you an analogy of IOSCO's certification for price reporting agencies, it's kind of like when a steel company receives API certification. So just like how API certification would show that a steel company is producing very high quality steel, IOSCO is how a price reporting agency shows that we have robust and representative price assessments. Could you move to the next slide, please, Robert? Thank you. So one of the cornerstones of how Fastmarkets hits IOSCO targets is an internal software system that we use that's called MIND, or Markets Information Database. And it is a fully auditable internal software that electronically logs all of the data that we collect from sources, as well as rationales, and even any corrections or complaints and their resolutions. So again, fully auditable. And it's how we meet IOSCO requirements on documentation and training and methodology and things like that. So on the next slide, I'll talk about our price review process. So first up, price reporters call and email sources in the market that are active in the spot market. Then we input all of that information into MIND, including what type of transaction it is. So when we talk to people, did they tell us about a deal or a bid, an offer, or an assessment? And we would record that information. We'd also say who the person is in the market, if they're a buyer, a seller, or a trader. And we could record things like tonnage levels, any notes that they made on the market about supply and demand, or just general commentary that they have. The next step is the reporter would then use their judgment, which I'll explain a little bit on the next slide, to set the price before we get to the peer review process. So the reporter would set the price, then it would go to a peer reviewer, and they would review the data and the notes. And then finally, an editor or a senior price reporter like Robert is able to publish the price. So I mentioned a reporter uses their judgment to set, if you could just go back one slide, please, Robert. A reporter uses their judgment to set an assessment. So in some high liquidity markets, like the US hot rolled coil market, for example, we use an index approach, which is really mathematical, and it's a tonnage weighted calculation to arrive at the published number. But for a market like SBQ that has it's a pretty small spot market in comparison, we just don't get that same level of liquidity to be mathematical for it. So our goal with these assessments is to reflect the actual or probable prevailing level of transactions over a set period of time. In the case of SBQ, that would be 1 month. So price reporters consider two things mainly when doing an assessment. They look at confidence levels. So like, how well do we know the source? Could they show us a purchase order to prove their transaction? And do their inputs match what other people in the market are telling us? And then the other big one is significance of the data. So a deal is considered to be more reflective of the spot market than, say, an assessment where somebody says maybe like, oh, I haven't bought anything this month, but I think the market is here. Right, we wouldn't weigh that quite as heavily as somebody who says, you know, I bought yesterday and it was at this level. So it's really like how specific or vague a source is being. Okay, and then on the next slide, we take confidence and significance together and we boil all of those inputs down and arrive at a conclusion about where the tradable level of the market is within a set period of time. And again, for SBQ, that's 1 month. So we get this question a lot, but we use what we call a full window approach. So in SBQ, which is set on the monthly on 3rd Fridays, if we receive an input at the beginning of that rolling month, it is weighed just as equally with an input that we receive on, the day before we set that assessment. So we're not favoring inputs based on how recent they are within that monthly period. And the reasoning there is that if you see prices that are very different at the beginning of the month than prices at the end of the month, we should be assessing that market more frequently, right? So we could assess, if we saw that happening in SBQ, we could assess it every 2 weeks instead of every month to capture those differences. So just wanted to explain that. And that's it for the methodology part. So thanks so much for listening. We're going to get into Q&A right now. And again, just as a call to action, if you're listening to this, you're active in the spot market, you're not already speaking to us, I would love to chat with you. And when reporters talk to you, it's fully confidential. And we also share what we're hearing as well. So it's a two-way street.